Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, as you can see, Bitcoin on the 4-hour, we are currently below our next level of support. This 20,000, this all important $20,000 level. We are actually currently at basically 19,000. So looking to take out that 19,000 level. So things are not looking great here. Obviously, we know we can get a cascade of liquidations, all sorts of problems that we all know are going on with various entities in the crypto space. But yeah, lots of those guys struggling out here. Lots of people have been exposed, not wearing their trunks as the tide went out. But yeah, as we can see, looking bad here. I would say the next major level of support that I've noticed quite a few other people speaking about as well is around this $14,000 level. I don't know if any of you guys were trading way back when 14,000 was a pretty important level that we rejected from, which was the 618 extension. So it was a pretty obvious trade at the time. And I remember it literally collapsing about $2,000 pretty quickly. But yeah, this is about that level here. So we'll draw a box in here. There are obviously levels in between. This level around 16,000. We will draw this box in here as well. Just see if we can hold the price up by drawing shaded boxes. But yeah, we've got this level here. But yeah, I think the target is going to be, say the target for pushing to liquidate people is going to be around this 14,000, and we'll see. I'll show you guys where it comes from. It comes from basically, yeah, all the way back here was a pretty not that one, sorry, yeah, this one here. So obviously after we had our major bull market 20k top, we then collapsed down to around 3k, and then yeah, 14k was basically the 618 target, and yeah, we then rejected off there. So it's a pretty important level, and then once we broke above there, we were up and away. So that is a pretty important level. If I had to guess if I had to pick an individual level of where we have the best chance of putting in a bottom at the moment, in my opinion, that would be around 14,000. So yes, do with that information what you will. Probably just ignore me. But yeah, that's what I say is going on there. With all sorts of FUD going on. I mean, basically, the Fed is fast losing credibility. A lot of finance professionals are just like, why are they like flip-flopping last minute, listening to basically University of Michigan numbers. They are basically going to be a new important number for the Fed to have, the market to have to react to now that the Fed reacted to it so quickly. But yeah, I think they call it UMich, the University of Michigan number is going to be important. Obviously, all inflation numbers apparently as well can also make the Fed flip their decisions last minute. So they are flapping around now, playing catch up, which they never will be able to catch up. They're chasing something they won't be able to catch, and obviously a lot of this is supply side. We are basically deglobalizing in the world, so that is inherently structurally inflationary. So we could be going into secular inflation. A lot of people are thinking anyway, but usually it's the doom and gloomers that are always predicting secular inflation, the Peter Schiff types. But I think it's looking more and more like we are just going to enter a secular inflation world. I don't think politically we're in the right headspace really to really deal with things. I think the West has gone just nuts basically, and they're not pragmatic at all. They're just acting like irrational women. left is basically driven by their emotions and whatever the latest information, whatever information the latest meme is purveying to them. So yeah, we live in crazy town. I mean, literally, Biden is just gonna Biden, who himself, why is he president when he's clearly senile? Why was he elected? Because obviously the media told you that orange man bad, and they pumped it into enough people's heads, and those people then obviously anti-voted Trump out, basically by voting for the other guy who's practically a corpse. But yeah, that guy alone is a symptom of the problem we've got. But yeah, then he comes out, it's like Putin's price hikes, whatever. We all realistically know that a lot of these all these problems basically were going on before Putin decided to do what he did. And I mean, I personally, tin foil hat conspiracy theory, but it's not really, it's just game theory. It's like the world's run by smart people, and I like to think I'm a relatively smart guy. I try and put myself in their positions, and if I put myself in Putin's position, I would look at what absolutely stupid stuff the West has done regarding its energy policies, shutting down obviously nuclear power stations, shutting down all the other stuff, and then obviously creating all this inflation by also not just shutting down energy production in these countries, but also shutting down the actual economies due to COVID, and then obviously doing massive printing, causing inflation, pushing energy prices up. I just would, if I was Putin, I'd be like, wow. I mean, I've got such an easy, obvious opportunity here now to not only just take some territories and land that are rich in food and energy, and also basically drive up prices and just collapse these economies, because it's like the straw that broke the camel's back. Basically the camel is like these Western ridiculous economies, the US and particularly Europe. And Putin's like, well, if I just place this straw on the back, I basically get to F them all up, and I will be fine. And yeah, I mean, it will be great for me. Even if there is pain, it won't be any. It would be a relative massive win. Everything is always relative. Everything's a relative trade. Putin will obviously experience a little bit of pain. The rest of the world will experience a lot of pain. Putin will come out on top in a more powerful position, and it's just like the West presented him with this opportunity. So what I am trying to say is, the West presented him, and then they also, that's not then to ignore the fact they antagonized him, but I do think on a global scale, smart people, you can be antagonized and not be a call to action. But yeah, the West did antagonize him as well, but like I said, not as important as the fact that the West presented the guy with just an opportunity which he just couldn't not take. He was like, this is just a no-brainer, guys. So yes, that is basically what is potentially going on there. So let's have a look at the absolute destruction that is going on in the rest of the markets. S&P clinging on to this very important level. However, closing on that for a weekly close is not going to incite confidence in obviously the higher time frame weekly traders that will be trading bigger size on weekly charts, because you don't trade a weekly chart with smaller size, you trade a larger time frame with larger size. And they're looking at this thinking this is on the precipice of an absolute free fall. And by free fall, we're talking stock markets, we're not talking like what is literally going on in Bitcoin as we speak. A free fall, at least firstly down to anywhere between, I mean, it's difficult not to see a 3,000 handle on the S&P. These things, we are going into a recession. If not, we're going to go into a recession, if not a depression. Energy prices are just, there's no abatement to them. Like I said, I don't really see that there's any real reason why any Russian leaders are going to want to take the foot off the neck of obviously Europe and the world. I don't really see any option. There is no option ultimately than more printing, even if it has to be fiscal stimulus rather than the monetary stimulus, i.e. basically governments just giving people money for food and energy. And what is that if that is not inflationary? Well, it is inflationary. Yeah, just there's more pain here to be felt. We also probably seeing the start of the actual yield curve control within the US, and I mean the Eurozone has basically admitted it with its special tools. with its special tools. The Eurozone now has special tools for obviously special problems. They basically, as in the Eurozone, as in the ECB, they just have buying bonds. That is the tool. There is no other tool. There is buying bonds and then obviously the rate. But yeah, so they're basically buying bonds because obviously spreads are blowing out between like a German and Italian debt. So yeah, that thing is falling apart. But yeah, I think we're also now seeing it in the Fed in the US as well. This buying this move, what was just looking like it's gonna go parabolic, and this would literally cause a stock market clash if this went parabolic to say 4.5% in a short space of time. Just game over for stock. It's game over for stocks anyway. But what we are having is an orderly retreat, an orderly retreat of these markets, and an ordinary deflation of the bubbles. orderly as in so far as like they're basically trying their best not literally just to stick a pin in it and it go. They're trying to like unknot that balloon, that knot in the balloon, and then just let the air out gradually, which in all fairness, so far so good. But obviously there is potentially like room for stocks to go like 70%, let's call it 60, 70% lower, maybe even 80% lower. There is room for that. The fair value is probably down there, especially given the basis that we're going to go into a recession stroke depression, because no one's going to have any money basically because they're spending everything on energy. They're going to get given stimulus checks, but that's going to go on energy. That's going to cause more inflation. They're going to pin the yield curve. That's going to cause inflation. The inflation is going to give people less money. And yeah, Finance 1.0, I mean, I say this a million times. Finance 1.0 basically died in 2008. It's been a Frankenstein monster pumping, trying to basically reanimate that corpse, and like just like Frankenstein, basically. That's why that analogy is used. And yeah, I mean, ultimately, there's only so much they can do, and eventually it is gonna literally fully be dead. Yeah, that's basically it. We need some sort of a new start. I mean, the kings, what they call the masters of the universe, the finance people, have like basically milked and pillaged this whole monetary system, finance system, as much as they realistically can. In 2008, obviously, the banks were bust. They had to basically pass on those liabilities to the sovereigns, i.e. the central banks and governments, and the governments basically. They're practically one and the same. And then obviously once they go bust, which they're doing now, there is no one to pass that debt on to. So yes, there you go. We are in the end game. How long this can drag on for, who knows? But I mean, this is seriously looking like we're done out here. We are done out here basically. What else do we want to look at? Yeah, dollar index did pull back. And has bounced basically back up. I mean, again, it's putting the squeeze. This will keep going up until it basically crashes, like any chart basically does. Goes up parabolic, then crashes. We see it. I mean, we all crypto bros. We know exactly we know that story all too well. We know how that chart pattern plays out. That is ultimately going to happen with the dollar, especially once this energy printing and energy stimulus printing and also yield curve becomes a bit more apparent. Yeah, we're going to see that. US dollar, Japanese yen was looking like it was going to try and pull back. Nope. Was looking like it was trying to pull back. Nope. I mean, there is basically a George Soros type attack. I'm not saying it's George Soros because ultimately he basically likes the financial system as it is. But there is basically a sustained attack on this currency to try and basically break it, i.e. force the yield curve control to stop. At which point obviously this will come down, but they are driving it one way first to break that yield. So basically people are going to be doing the widow. I mean, you'll hear these expressions a lot. Like, these are literally expressions from like 2008 times, like the Widowmaker, and what was the other one? Yeah, the swimming trunks one as well from Warren Buffett. But yeah, these are like 2008 expressions. It's all coming around again, but this time for real. But yeah, the Widowmaker trade short Japanese bonds. But yeah, and obviously that has not done well. But yeah, basically what is going to happen, they're going to squeeze this yen down. So basically there's a dollar going up, so they're going to basically sell the yen down to the point that inflation is so high in Japan that they're then going to have to stop the yield curve control, which I think people pretty much are already predicting they're going to raise it. What they're going to raise it is 0.25 basis points on the 10-year. Maybe they raise it to 50, 75, whatever. But I mean, once you start doing that and you blink, once you blinked, that's it. People know they can keep pushing, and that's it. It's off. It's off. It will be off to the races ultimately, and then that will bring this down. But obviously, you short Japanese bonds is gonna be where you're gonna make the money. I mean, we are in basically when the pie is shrinking. Everything becomes super adversarial and super predatory. You're going to basically have hedge funds against hedge funds. You're going to have smart people against smart people. It's literally they're fighting for their lives now. There are Hail Mary trades each way, each direction on anything. I mean, we're seeing it more acutely in crypto, and it's more obvious to see what this is happening in Finance 1.0. This is basically where it's not even like careers are made or broken. This is a point where you either survive or you don't. It is survival of the fittest, the smartest, the fastest, and yeah, they were literally they're hunting each other now. Like, if to use the analogy of the smaller pie, it's basically indicating like there's less food. So we're in an environment where there is less food out there, so the sharks are now starting to attack each other. And it's obviously going to cause all sorts of volatility. I mean, crypto is getting attacked, Japanese yen's getting attacked, bond markets everywhere are getting attacked, currencies are getting attacked, euros getting attacked, Ukraine's getting attacked. But yeah, literally we're in an environment of people like, I mean, we see it. We're in crypto. We see it more acutely in crypto because a lot of it's on Twitter and a lot of it's on chain. And we can see there are certain entities attacking other entities now, trying to make power plays because, like, the feasting on just Joe Public and the average retail guy, those days are done. Those guys are not here in the market anymore. Their capital has already been taken away, and now they are turning on each other. So yeah, just super like I said, super adversarial environment now. And yeah, one of the things that is going on is they are trying to basically collapse Japanese bonds. I mean, the Japanese economy is basically a joke. It only managed to sustain any real sort of GDP because its population is just declining. Yeah. So yeah, let's not pick on Japan, but however, Japan is something that I've seen talked about for many years as potentially what is going to cause the collapse of the whole world's financial system. Because in effect, the world financial system, like the Fed, US, pretty much dollar banking, that whole system basically died in 2008. The Japanese one died basically back when when they gave up. They submitted to the US and basically said, okay, we will stop strengthening we'll stop allowing our currency to appreciate because it was going to take over the world reserve currency. Japan was getting too powerful. They just did a deal with the US. Then obviously Japan then had to buy treasuries. That's why it has this massive amount of treasuries, and why it got all this military spending, has this close relationship and whatever. There were plus sides military wise for Japan, but basically they should have just carried on, just been, well, for their own benefit. They should have. I don't know how that would or wouldn't have worked out, but they basically did submit, I forgot what it was called now, the whatever Accords, it's something Accord, I'm sure it was, but yeah, there you go. Yes, what else we're going to talk about? I think that's pretty much about it. That is enough doom and gloom here. I mean, let's have a look at some other things. Let's look at Ethereum BTC holding under there. Interestingly though, that is down, but the actual Bitcoin dominance has taken a whack. But I mean, kind of what it's telling me to me is we got to the point where people have also been whacked so hard, a lot of them, that people that still have them are just holding that dust in their wallets and not going to sell. I know that I am guilty of said behavior. But yeah, we are at a support level anyway. Ethereum USD just obviously whacked an important level down here though, as we can see. Obviously on a daily here, that's why it looks maybe closer than it was. Important level down here. I mean, we are practically in no man's land now, so this level is should be acutely obvious as a target. We obviously got to squeeze. I mean, markets just have to hit max pain before they can recover. Even obviously gold, I mean, it's showing there's liquidity problems. We had one of the worst days for stocks and bonds both going down practically ever. I think it was on Monday. That is showing like real stress, real liquidity problems, and that was a point where basically the central bankers practically did step in. No one can convince me otherwise that they didn't. No one was deciding they wanted to rush in and buy this SH1C at a point in time when it was looking so dire. There's loads of times where you see stuff. I mean, even alone the leverage short vol trade is literally just to manipulate markets higher, and that trade did blow up some hedge funds as well, incidentally. What else? Oh yeah, oil though is coming down, but it's not coming down. I mean, I said this before, everybody is so obsessively long oil and commodities, and yes, that is fine, but that it kind of is indicating like on a macro scale, we need to have a pullback and put in a higher low, and that could easily come in around this support level here, before ultimately then turning higher. But that is going to absolutely, I mean, everybody getting massively bullish. If we squeeze down to here, you're going to squeeze a lot of people out. We can maybe wick bases underneath it on a higher time frame maybe, but yeah, ultimately bounce from here. But yeah, everybody is massively long this. It kind of and I mean, markets are driven by liquidity in the short term. Ultimately, they're always driven by liquidity in the short and quite possibly medium term as well. And this is where a lot of people's liquidity is in energy stocks. This is just oil, but obviously energy stocks. So as things start to hit the fan, I mean, yeah, this will come down. I mean, yeah. So yeah, there you go. I mean, it's like. This is primed to squeeze everybody out of it in much the same way markets do. They will always tend to what it's going to cause max pain, and everybody, literally, honestly, you can't go. People, I think, and people even having like oil barrel eyes on Twitter. Like we get the crypto red eye thing. Yeah, oil barrel eyes. Yeah, I mean, the market's obsessed with on there. At present, though, all we're doing is coming down to this support and remaining within this channel. So nothing to be too alarmed of yet. We should expect a bounce here. Then it's a case of do we get up to here, get rejected, come back down, take this out, and then we put the real squeeze on, potentially to literally an 8 handle in oil. That would really put the squeeze on. Also, this trade is practically the markets are practically I keep saying, but about like almost all the same trade. Those trades are obviously short general growth and tech stocks, short crypto, short risk, long commodities, which are all actual risk, but still the long commodities, which is fair enough in this environment, and then obviously short bonds and long the dollar. It's all one trade. So if we do get like any sort of a bounce in actual markets, then and if the Fed is starting to come in to help, and then risk assets do start to recover, this will come down pretty sharpish. But yeah, we'll see. It's all just structurally, long term, macro, secularly. We all know this is almost definitely bullish. We don't know anything. Nothing is certain, but it's as near certain as anything can be in markets that basically there is a problem with energy supply, and yeah, because of the Gretas of this world, the idiots of this world, basically. So yeah, ultimately long term up, but yeah, markets put a massive squeeze. In all fairness, I mean, I will be biased in here. Same with Ethereum. This is basically a massively important, massively great asset, but yeah, we've got massive bullish catalysts, but at the moment getting whack it down in the other direction. I think similarly we could see something happen in obviously other markets. But yeah, I think that's enough doom and gloom for one day. You'll even notice my red background. for the occasion. But yeah, that's about it, guys. Remember, this is not financial advice. Apologies for the long video, but I'm not doing them every day now. I mean, there's not too much to talk about. We're in a bear trend. We're going down until we're not, until things change. The the beatings will continue until the morale improves. But yeah, I think we're just in bad times for a bit until I mean, because there's just no real way out of this. Asset markets, there is a way out. Obviously, the Fed can start printing. We can start basically printing money again, and we can drive another bubble. But there's no real way out of the underlying problem. So either we do that and we go up, and they're great, but things are still being a mess, or everything's gonna collapse this time. Who knows? But yeah, so there we go. Like I said, not financial advice. Thanks for listening, and I'll speak to you guys soon.